market review for Monday, November 3rd, 2025. Starting on the daily chart here, we have a couple PD arrays in close proximity to each other. So our first one is this wick here, and this one here as well on this candle from, I believe, last Thursday. Yep, last Thursday's candle here, we have an extension from both sides that also traded into the fair value gap that is down here. And we also have a small volume imbalance in here and a fair value gap in here as well. We will mark this out here. These couple visuals here. Let's make it like this. Alright. As you can see today, we open kind of a lot of indecision, consolidation in the market right now. All wicks around, nothing too meaningful at the moment. So we are looking for just kind of low-hanging fruit objectives, close objectives and targets to take without expecting any crazy moves to the upside or downside right now. We'll drop down to the 15. I don't want to use the hour for any reason, but I will be doing the analysis on our morning here. Let's go to 9:30. So in the morning at 8 a.m. we had this extension up here where we traded up into, I don't believe there's anything meaningful up here, to be honest. But if we look at our new day and new week opening gaps first, we get a trade up into a lot actually. So at 8 o'clock today, we got a trade up into the new day opening gap high. Then we got a 5-minute breakaway gap here in between the levels of the new day opening gaps. And we ended up trading to the new week opening gap high and almost to the lower quadrants of it. And then we start kind of banging around in here, under here. When we're stuck between things like this and like this, you can expect a lot of high resistance because price doesn't have anything quick to move towards. So we expect it to bounce around a little bit. It's going to trade through into a lot of different PD arrays. But in the morning, I'm going to go back to our live trading. You can see on our 5-minute here, we have this quadrant here, and we have the consequent encroachment of that wick that does not get reached. We have this one, and in here we have a breaker here. We have it down, up, and it down, and we don't trade into it, but we do have this fair value gap here overlapping with the volume imbalance that we have outlined with these quadrants. We do get a close under it, trade up here, break down, and take sell side here and here, and actually here as well, and then trade up into this suspension block on the 5-minute chart, overlapping the, I believe it was the closing price, of the last Thursday's daily candle. Trade up, drop down, little fair value gap here, breakaway gap actually is this, and then we trade down perfectly to take this sell side liquidity. After that, again, we're just banging around, not much after that, but I do want to take a closer look on the 1-minute chart at this price action. So we get our open here at 8:30. We get kind of a pretty significant sling upwards, and at 9 a.m. we also get another move pretty high. We trade down into this fair value gap, consolidate, and then right before open we rally up, take the buy side, create the first position fair value gap right here, and then we break down. This then turns into a breaker block. Well, it was a mitigation block, then turns into a breaker, overlapping the 75% or the lower quadrant of that daily wick. Trade up into it here, failed to reach it here, and then we break lower. And this here, overlapping this quadrant, if this had traded into, I would have taken an entry here as a short. This one here, because it is not overlapping, I don't necessarily want to see it in there. But this one for sure, I would have loved to see it trade up into here, get a really nice premium before selling off. But we then have a sharp decline. We get this inversion fair value gap here, not overlapping any visible quadrants, but you can see it is still used here, so it just becomes a common gap where it does afford an entry here if you wanted to. And then off of that inversion fair value gap, we then have the 5-minute fair value gap here, overlapping the volume imbalance that we trade under, up into again. If we go back to the 1, you can see that a little better. Oops. On the 1, you can see how we do that here. We close, trade up, and here. And off of this, overlapping with the volume imbalance and the, if you can see, 25% of the opening range gap. Try to have an order block where price breaks lower, trades up into it here, 2, 3, 4. And then we break away once more. We have the opening price of that daily candle on Thursday. That it forms a bearish suspension block over top of that. The price drops lower. We do get a fair value gap here. You can see we do get this, but we do use it. But because we have this higher one and it is a suspension block, I want to put more value onto that. We don't reach consequent encroachment of it here or here, but another 5-minute fair value gap is in there where we trade up into it here. Breakaway. Where did we go? So we had, forgot to align this here actually. We had this pre-market sell side right here. That was my low-hanging fruit objective for the day. See, we trade into it here. We touch up into the bearish suspension block. Trade down lower. Take the 50% level of the opening range gap. Create a fair value gap off of that level. Where if people aren't sure what's going on, this may be a long for some, as well as this inversion fair value gap here, people would see as a long entry with a breaker. But if we take a look at the 5, we still are in a bearish market. The only thing I would want to see is maybe a trade up here, but not getting up here is a really good sign. And instead of reversing from this level in here, we trade up into, I believe, oh, that's also a suspension block. Trade up into that. We get this volume imbalance here on the 5-minute. I didn't use this for my trade. I think I was already out around this time. And I will go over my trade in a second here. We have that. And if we go back to the 1 minute, after we've seen this 5-minute suspension block, we come back through. Oh, it didn't give me my. Let's see this. Oh, yeah, it's on there. I think if we zoom in more. Yep, there we go. So we have the levels here. We trade lower. Get this inversion here, overlapping almost perfectly consequent encroachment of the 50% of the opening range gap. Trade down into it, bodies respect consequent encroachment, also trade into this, sell sign balance by sign efficiency. Then you drop down lower into the daily fair value gap that is right here, and take the sell side by just a couple ticks. And then we reverse and consolidate for the rest of the day. A little bit of movement up into this suspension block once again, but other than that, really not a whole lot of important moves except for rated close here, where we get up into this volume imbalance on the daily chart off of these wick levels here and the midnight open. Well, and also 50% of opening range gap. But again, focusing on just the opening range here, you can see we got the entry here should be executions. So first entry, 209, about right in here. So I was trying to time it with this breaker here, got a little bit late, got in about 209, first three here. Initial stop loss was above first percent fair value gap. So about 209 to, so 50 handle stop loss isn't great, it's not ideal for me, but that was the risk I was willing to put on for here. And we got the displacement lower, and I added another one at 178, which is right in here. So as soon as this candle started to flip green and trade up into this inversion 5-minute fair value gap, I sold another in there. And then there was also, you can see here, this 830 bullish candle, there's price and balance, I'll say inefficiency. I took one off at the high of this, just because based on this, it is overlapping a quadrant, and I wanted, like, I needed a partial. Like, this was a lot of risk, and I needed to grab something to mitigate that a little bit and just pay myself. So I took that off there. I probably could have sold another one at this order block here, because this is pretty strong. But again, I had just taken a partial. I moved my stop loss to break even, so I was about up in here. Fully prepared that if it flipped, I had at least booked about, it was about maybe 100 in profit, I think, around. But I got at least 50 handles of that initial. And then price, again, obviously flipped. My low-hanging fruit terminus, well, not my terminus, but my low-hanging fruit objective, I should say, was this sell side from the London session this morning. I took two off of there, and then I had one on for the 50% mark of the opening range gap. I could have held on longer, but after I hit here, we did trade up into here and likely would have stopped me out. To have this as a terminus would have been obviously fantastic, but that's a large move. I think that's, what, almost 200 handles. That doesn't happen very often. So I'm totally okay getting, what do I get here? 50? Yeah, 50 handles, 60 handles for my terminus. Totally okay with that. Like, that is more than enough for me. And if I can continue to scale with that, I'll be in a great spot. But this trade today I was very happy with. I felt very patient in this one. And yeah, this breaker, to see this work the way that it did, to trade off of the 5-minute with the volume imbalance on the daily chart, plus this suspension block, seeing how that got traded, and also this sell-side liquidity in here from prior to news. So there's a huge pool in here of people wanting to long from the news pump coming out, where it stole it and then traded up right into it again to the tick. Look at that, 155. What's the high of that? 155 even. That's perfect. But yeah, this as well could have been a potential entry for a scalp, but not what I'm looking for. But yeah, so that's gonna end this market review here. Very happy with this trade. Very smooth price action today. I will be trading tomorrow, and that will be it for the week with non-farm payroll coming up. But tomorrow morning could be clean, just like this, and I'm looking forward to it. Thanks.